Why would Kinross give up such a good asset?
It's a question we get often, and look, I worked for major mining companies for half of my career, and you know, mining companies do this as a matter of routine. An asset becomes tired, it sits as a liability on their books, whether it's a reclamation liability or just a straight holding cost liability. And so, this fatigue that sets in, and then sort of corporately the decision is made. We want out of this project. We just want it off the books. And it's not just Kinross. Other major mining companies did it. Placer Dome, for example, the company that I worked for, has gave away many assets that are now very profitable mining operations. In this case, Kinross had this asset on their balance sheet for about the better part of 20 years, and it was shut down due to low gold and silver prices of the late 1990s, early 2000s. And so it was one of these assets, and I think that's key when you're looking for an asset to acquire. Look for an asset that was shut down during a low commodity price environment, which means that there's still juice left to be squeezed out of it, but it was just sort of dropped for reasons of lack of margin in the case of Kinross when they're operating.
Okay.
And
So that's quite interesting. That's a phrase we've very little heard. Before we get stuck into what you think you've got, can we just talk about the plan when you set out? I know you wanted to replicate Integra Gold. I get it, but was there more to it? Because after the success of Integra Gold, I guess you're thinking, well, if it worked there, we can make it work again. But if you can explain a little bit about what you saw in this project specifically, which said, I think this could be the same thing all over again.
Yeah, well, so I think, again, going back to the sale of Integra Gold and the group getting together essentially and saying, we're going to stick together. So what do we want in our next asset? And we looked to all of the attributes that we had in the asset that we had in Quebec that we had just sold, which was, tier one jurisdiction, access infrastructure, great, large database to work with. And that I think is key, right? We're not starting from scratch by any means. Friendly jurisdiction, government support in the case of Quebec, obviously a great mining jurisdiction. In the case of Idaho, same thing, right? We've got a very mining friendly and supportive state government, and a large resource. And so, it ticked all of those boxes for us. We weren't about to go to tier 2, tier 3 jurisdictions. Been there, done that personally in my career. Getting a bit old to be going down that road, and so the choice was pretty easy.
Okay, and I know, and again, it was a big number, $625 million. But looking back, is there anything you learned from the Integra Gold process? Could you have got more out of it? Could you have pushed it out longer before you did the trade, or did you get out at just right time? And what can you bring into the new project that you learned from that?
Yeah, I don't know that many people really realize that towards the end of the Integra Gold run, we were really close to actually pulling this or flicking the switch on going into production. We had, I think there was 4 term sheets that would have seen us fully financed into production, and we were 6 or 8 weeks away from signing those term sheets. And so, we were underground. We had the ramp was going in. We were buying all the expensive gear that you need to get into production, and then Eldorado came on with the bid, and then it became basically a benefit analysis. What does this asset look like, fully developed by Integra, and all suffering the slings and arrows of getting into production and looking at the landscape of juniors who try and build something, and the burning wrecked hulks of juniors out there who try and actually build something and fail, and the risks involved in that versus a premium offer which would put it in the hands of an experienced mine builder, and really the decision was easy at the end of the day.
And you guys must have done quite well out of it yourselves. Very appealing.
We did, yeah. We plowed a fair bit of our own capital back into Integra Resources.
You have?
That's simple.
Okay. So if I look at the share price, May last year, not so hot. It started picking up, but didn't really start moving until this kind of gold price surge in sort of late August, September of last year, and you benefited from that, even though you're not a producer, which is a kind of unusual. Most juniors, certainly not in production, didn't really see that bump. What else was going on around then, which kind of got the market excited about what you were doing?
Yeah, we had two pivotal events occur last year, sort of around the mid-year mark. And as a geologist, I would put equal importance PEA versus the revised resource estimate. I would personally put a lot more emphasis on that revised resource estimate, and that was key, because not only was it a large jump in resources, but it was a large conversion of resource category.
Yeah.
So no longer were we dealing with 100% inferred resource. We're now dealing with a 90% M&I resource, and that came by a lot of work that our exploration team did on site. And so for the first time, this is where the investing public saw a discrete breakdown of the oxidation states of the mineralization. I'm not allowed to call it ore, by the way, apparently, but mineralization out on site per oxidation state. So what's oxide, what's transitional material, and what's sulfide? And that's important for us because we find ourselves looking at this project as a heap leach opportunity as opposed to a straight milling opportunity, which is what Kinross were basically, what's how they mined and operated for 20 years. They didn't care whether this was oxide, transitional, or sulfide mineralization. They were stuffing all of it through their mill and happy to get the recoveries that they were getting.
Okay. Can I ask? I would agree with you. I think most companies which put out PEAs last year didn't make a damn bit of difference to them in terms of the share price or people's perception of what the value could be. Was that a conscious decision to move the M&I up so much? I mean, 90%, that's a significant shift. That's a big number, right? Was that a conscious decision knowing the outcome, or was that just you got lucky?
You have to get lucky sometimes, right? But no, it was a conscious decision. There's 250,000 meters of drilling that we inherited in terms of a database from Kinross.
Yeah.
That drilling, the average spacing is 20 meters.
Right.
And so we knew if we were to categorize the mineralization styles and specifically the oxidation states, we knew we could get to a large conversion. Did we think it would get to 90%? No. So there was an element of luck there, but we knew that there would be a large conversion done that would occur by breaking down oxidation state.
But like I said, you've had huge success in the past. I'm trying to gauge just how smart the team is here, because if you have consciously made a decision to spend that money to try and move that measured and indicated, and knowing that you would get that kind of result, that's really smart. Smarter than any story we've heard for a long time. But given a lot of companies last year spent money and did things which had no material impact on their share price, you got to ask the question, whether how good or how strong or how logical were most of the management team spending money last year. But you've done something quite smart there. I get it. It's deliberate, a little bit of luck, but deliberate. But what's the next big move for you, or are you going to plateau for a while?
Yeah, so we're trying to stay out of the Lassonde curve, if you will, which is we're flatlining for the next 4 years. And in the course of marketing Integra, and we all do it, myself, the IR team, we're constantly polling our shareholders. What do you want to see? What's important to you? And I would say it's split 50-50 between the crowd who just want to see us just explore. They don't care about studies. Feasibility, that's boring. It's like watching paint dry on the wall. And we've got another 50% of our shareholder base who actually want to see us take this project as far as we can and de-risk the project with feasibility studies, with starting the permitting process, which we'll get to, I guess, later. So we're basically trying to satisfy both parties, which is keep the foot on the gas of exploration while we de-risk project with feasibility level studies at the same time.
Well, that brings us to your shareholder register. Okay, you're sitting with a lot of institutional money in there, so slightly more sophisticated audience interpreting what you're going to do, what you have done, and what the numbers say. Okay, so I imagine they appreciated what you did with regards to moving that measured and indicated number through, and you've got a much smaller retail component here. So, of the 50-50 balance there, the institutional guys want to see slightly more conventional reporting, feasibility studies, etc., because it allows them to measure what you're doing, or is it different from that?